Market turmoil aside, the U.S. economy looks to be a beacon of stability in the world. New numbers out just a short time ago show the U.S. economy grew at a much stronger than expected 3.7% annual rate in the second quarter. That's almost 1.5 percentage points higher than the previous reading. Mark Zandi joins me now with more. He is chief economist at Moody's Analytics. Mark, thanks for being with us. So is this reason to feel good, this GDP number? Is there something going on underneath that should make us a little skeptical?
Yeah, it's good news. The economy is growing strongly. It's I would argue, the strongest growing economy on the planet. Now, this number overstates the strength. It's not quite as strong as it looks. But, you net out all the caveats, and it still shows a U.S. economy that's growing about 3%, which is good.
And what does this mean for the Federal Reserve? There's been a lot of debate about that. And, of course, when the Fed moves, it affects economies all over the world. What do you think they're going to do in light of this? It seemed like yesterday they were sort of indicating that they were thinking they weren't going to pull the trigger.
Yeah, my sense is, given the volatility in global stock markets and concerns about what's going on in China, that the Fed will wait a little bit longer. As you know, Maggie, they meet in a few weeks. There was a lot of thought before this volatility that they would raise rates at that meeting. I'd say the odds of that now, the chances of that are below 50-50. But, given the strength of the underlying economy, given all the jobs we're creating, given the fact that the economy is approaching full employment pretty quickly, I think they will start raising interest rates before the year is out. I'd be surprised if the rate hikes don't begin before the end of 2015.
Mark, when we look at that U.S. economic growth, even if it's a little overstated, if we're looking at something that's closer to 3.5% or at 3%, is that strong enough to pull the rest of the global economy along with it? Or could those international worries that we've seen and struggles in China pull the U.S. economy back to subpar growth?
Good question. I think under most scenarios, the strength in the U.S. economy should prevail. The U.S. economy accounts for almost 1/4 of global GDP. So it's a very large economy, lots of links with the rest of the world. And I think we can pull the train, just as long as China doesn't sink into the abyss. I don't think that's going to happen, and I don't think that's likely. But as long as that doesn't happen, I think the U.S. can lead the way. And the other important point, at least for us here in the United States, is our economy is very global, but in the context of other economies, we're actually very domestically focused, that the share of our growth that comes from the rest of the world is relatively low. So if consumers here are spending and businesses are investing and hiring, we should be fine. We should be okay. And I think that's what we're seeing in the data today.
Yeah, that's really comforting. I heard somebody say something interesting the other day, and it's that, you have to make a distinction when you're in these periods of volatility, that what's happening in financial markets is not the same exact thing as what's happening on Main Street. We certainly know that that's true to a certain extent when we look at maybe Chinese stock markets or even European stock markets. The thing is, here in the U.S., a lot of people have the retirement in the stock market. We don't have full investment, but we have a lot more people exposed, at least on a psychological level. Do you think the events of the past 2 weeks have the ability to become an economic event, to make people feel less confident and have an impact, a real impact on the economy?
Yeah, it's sure possible. Just to give you a number, about half of all Americans own stocks. Half don't, half do. So it's consequential. It's a very important asset for a lot of households. So it does matter. People are focused on their screens, particularly in times of volatility, and it will affect their thinking. But, I think we need to put this into some kind of context, right? I mean, the stock market goes up, it goes down, it goes all around. It's very, very volatile. I think we kind of forgot that over the last few years because it's been going straight up. But now we're saying it can go down, and it will go down. And so everyone needs to just, take a breath and realize that this is what happens. And also recognize, however, that if you can look through the volatility, and you should, that on the other side of that, the stock market rises. That, year in and year out, it produces gains of 5, 6, 7%, and that's what you should expect.